You will flip your $3 to $80,000 like me today. If you unravel the 10 secrets top traders who live your dream life gatekeep from everywhere. This guy unraveled just one secret and took $10,000 to $400,000 while loss still be digging your ass like Diddy so bad, even after watching 1,000 plus trading videos. Like, is the answer to this guy taking $120 to $2 million even out there. It looks so mysterious and impossible till you dig deep into the shadows and realize that they literally expose themselves, but we are too blind to see it. That's why I'm going to expose 10 different top traders' normal strategy and the hidden ones they don't tell you, which helped me take my $3 account to $80,000. Starting from Jeffrey Benson's secret strategy, which made me place my first trade buying gold aggressively. But why? In Joe's trend line and miraculously they get respected, and also mark support and resistance, and swiftly they get respected also. But when you and I do the same thing, we get bad results. Like at first you feel like you are just on a learning curve. They tell you it will take you 3 years to master the trading strategy. True, but they say that one day you get to live the big life, get the cars, the house, even make that your ex will leave you recognize your worth. It even got to a point where you even stole or borrow money to trade this so-called GURUS strategy, only to get dealt by reality after seeing all your funds vanish before your eyes. I start to wonder, is this innocent baby face looking guy a fraud? It's easy to get lost in the process until I opened my eyes one day and I realized with proof, this guy has been manipulating all of us. He literally had you all at the palm of his fingers, spoon feeding you all jargon, manipulating his real entry and hiding his real stop loss. Telling us that his stop loss is this huge, but is it? Because last time I checked, have any of us ever been profitable trading huge stop loss like this? At least not for me. Like, if you go to his chart, it looks normal, like nothing is hidden right there. But if you glance deeper, this genius literally gave you all his golden strategy for free, but you all missed it. He claims that this point here was his entry, but why is he still marking this line here? That's because that line is his real entry, and this one is just a lie, or let's just call it decoy. The was literally at a psychological level which are round up numbers big banks execute from. Like, it's much more easier for hedge fund trader to see let's buy at 191000 than say let's buy at 193111, something like that. And this guy exploited this method with his stop loss too. Allegedly, he claims this point is his stop loss, but that's all crap because his real stop loss was at that round up number there, which he marked clearly. This guy is literally a genius, using hedge funds habit against them. When I decided to test the strategy, looked for a breaker block and entered at a round up number, as you can see there, which is 2507550. But psychological levels alone isn't enough till you master Brad Go trading strategy, who claims to have taken $100 for $1 million, lives the typical influencer's lifestyle, driving fancy cars, riding horses, shooting to scare those who he allegedly scammed, and also push all the like top cheap. He claims to be motivated by his parents like all of us, but many seem to think he's a scammer. He talks about different strategies, but after a lot of backtesting, I figured out the others are straight up BS. But that doesn't mean none works, because one actually did change my life, and that strategy is
I have spotted 3 green momentum candles, which means
so your entry has to indicate there's momentum, and also
I'll be looking looking at the previous candle before this up move is formed, which is this red candle right here.
Then for the second confluence, you want to mark your demand zone
Low and drag it to the right, just like this. So
while for the third confluence, you want to create with multiple weak rejection. Your zone must have multiple weak rejection. And as you can see on this tree, you can see I had my volatile candle here. My zone had the demand zone there, and also it had multiple weak rejection on lower time frame. As for the third confluence, I stole this strategy from JFX, which is literally using imbalance as liquidity magnet. Why?
So imbalance zones are much more likely to be refilled. For example, if we have an imbalance here, but we have an imbalance here as well, it's very possible and very likely that the low zone is going to get retested, because we still have imbalance and inefficiency to fill.
So after learning that, I marked my imbalance because I knew price was going to go up, and added the last confluence for the flip, which is a trend line confluence. For that one, I used FX strategy because this guy is very hard to get any educational content on his YouTube channel. So I went to his YouTube, and this is what he had to say.
Your trend line is active at this point. Now you have to know.
So you basically say to know if your trend line is active, you must have at least 2 retests and it must be backed up by a breaker block.
You have this one. You have this second. That means you're expecting a move to just touch this line, so that what you can look for opportunity for a buy level at this point.
And one thing you failed to make mention is that there was a line there backing up his entry there, which is that trend line, which looks like a support zone there, which I did there. Backed my zone with the support. That was the trend line. That was the stuff that looked like a paper block, and I got absolutely insane result. And moved to the next trade and started spamming because this next confirmation showed that. Because the guy I lent it from is killing it. His name is Mamba FX, and let's see what he has to say.
Put this in replay mode, show you guys a better example. I tell you guys all the time, I do not take trades on close. I take trades as they are moving. So I didn't wait for this candle to close. I would have lost out on these pips, but instead I waited for price to start to break through this trend line / support. Then I took my sell position,
which is basically what I did. Mark that resistance zone at that point, and also that trend line there. And for the next conference, I used what I learned from loss algo, which is this.
Value gap is just one of the terms used to identify the imbalance. The FVG formation is a 3-candle formation where the first and third candle does not overlap. This leaves a gap within price, and that gap is what is referred to as the fair value gap. If this is formed while candles are going up, it's a bullish imbalance, and if it forms while price is going down, it's a bearish imbalance. Now, remember, an imbalance means there is a disparity in price, and if so, it needs to be corrected. So when a gap is identified, you can think of them as magnets that will pull price towards them.
So basically, I was waiting for price to pull down to that point there, and for the next confluence, I learned it from smart risk.
Liquidity is essentially determined by the placement of stop losses. Where stop losses are positioned, liquidity is found. Smart money relies on triggering stop losses to strategically enter the market, allowing them to establish their positions effectively. Every swing high and swing low contains liquidity. As smart money traders, we want to enter the market after the stop losses have been swept.
So basically, you want to enter and target the sweep of liquidity below, which is in form of trend line. So after you've done that, you close your position. You can see I was in huge profit here. I went to the next trade and started spamming entries using FX Alex G strategy, which is very simple. The guy, you can see, is balling and all. And here is what he has to say about his strategy.
12506, which is basically this one. I explained it yesterday that I was looking to enter, and I actually had this marked up here, but I didn't want to enter just there. I wanted to enter at the breakout of that area. So this is the consolidation zone that it was in. We had the breakout of it. We had the 4-hour bearish engulfing, and I entered.
So basically, whenever you see a consolidation happening, what you want to do is you want to create a breakout strategy, and for the breakout strategy you want to do this.
Breakout patterns you should have in the back of your head when trading. There's the flag, wedge, pennant, triangle, and rectangle. Now the problem I see a lot of people doing is they are looking for the exact price action that is in the pattern image. The price will rarely mimic the exact pattern, if ever. So you're not exactly looking for the exact price action that happens in the image, you're looking for the key support and resistance levels that make that pattern. Now, to be honest, it doesn't matter which pattern you get. Hell, you don't even have to memorize the names of the patterns. The key thing you have to take away from this is that all these patterns have something in common. The price consolidates, making two key levels, then eventually breaks out.
Which is basically what I did. I saw that price was consolidating there on lower time frame, so I was waiting for a breakout there to the top there. But the next thing I did, which changed everything, was using the apparently trading strategy. This guy spams the entry. Like if you get one position, he make sure he spam the life out of the entry, which is basically what I did. If I get one position, I spam entry. If it's going up, you are going to keep spamming. Goes up, you keep spamming. And when you do this, your equity is going to be going up, but your balance is going to be reducing because you are making loss low-key. But as long as your position is still open, your account is going to keep growing. And that was how I used all these 10 top trader strategy to change my life in just 2 days on one single trade. Peace.